Good morning, everybody, and welcome back to Morning Markets on Monday, the 27th of July. A couple of things that the investment team at True Potential have been discussing this morning. First, looking back to Friday when we had purchasing managers indices released across the Eurozone, and then looking at the consolidated Eurozone PMI number. What did we see in those numbers? We saw a continuation of the trend of previous months of a material improvement from the lows just a couple of months ago. And this was both evident in the services sector and the manufacturing sector, although the strength was very much more evident in the services side of things, with the services PMI improving to 55, the manufacturing PMI to 51. And remember that a reading above 50 indicates that the majority of respondents to the survey are indicating an improvement in economic conditions and orders and trends that their business has been seeing. That meant that the composite then improved to 54, the highest level that we've seen in the past number of months. So ongoing improvement in economic activity within the Eurozone. Turning then just to asset markets last week, what did we see? Well, we saw equity markets marginally weaker over the course of the week. That's primarily evident in growth assets or growth equities, where we saw those underperform the broader market over the course of the week. If we look at the bond market, we saw a little bit of further improvement, so yields falling, prices rising in the sovereign area. That was primarily most evident within the Eurozone. That speaks to what we touched on last week, just the recovery fund and the details of that, which were confirmed. So that supported the periphery of Europe over the course of the week. The corporate bond market, we saw spreads continue to come in there, again mirroring that which we saw in the sovereign market. Two other markets that I just wanted to comment on. One was in terms of what was happening with the dollar, and we've continued to see the dollar weaken over the course of last week, falling about 1.6, 1.7% against that basket of currencies. The other side of that, we've continued to see gold continue to increase, up over 5% last week, and continues to move higher this morning as well, trading at $1,916 an ounce, very much close to its all-time high in dollar terms. So we will see if we can move our way through that over the course of the coming week. Just looking at some of the data that came out over the weekend and just overnight, primarily just looking at Chinese industrial profit numbers. We get this number on a monthly basis. We saw in May that industrial profits increased 6% year on year. Pleasing to see that in June they've increased 11% year on year. So again, showing that build in economic activity translating into corporate profits in China. We get Chinese PMI data towards the end of the week. It'll be interesting to see how those numbers look in comparison to what we've seen over the past number of months. Thinking about the week ahead, quite a lot of data for us to comment on and to discuss as we go through this week. We have the FOMC, so the Federal Reserve meeting in the US. From my perspective, I think it'll be interesting to see how they discuss the current economic scenario in the US, given the ongoing rising infection rates of COVID-19 in a number of states, albeit starting to stabilise in others, and the actions that have been taken to curtail that. We'll also have GDP numbers from a number of countries across the globe. Again, that'll be interesting from 2 points of view. One, seeing the improvement in economic activity come through as lockdown has been eased, but also to compare and contrast the various approaches that different governments have taken to addressing COVID-19. So those that have been very successful with tests and of track and trace, I should say, versus those that have went for more draconian lockdowns of the economy. And we'll be able to compare and contrast those for you through the course of the week. It's also a big week for earnings. We touched on that last week, just where we had a number of companies report. This week we have a large number of companies reporting, and in particular a large number of technology companies. So I think we should hear from Facebook, we should hear from Amazon, Google, etc., or Alphabet as it's now known. So we'll hear from those companies over the course of the week, and that'll be interesting just to see how they're finding the current environment, but more importantly, what they're discussing in terms of the outlook. That's it from me today. Please join me again tomorrow. Many thanks.